Now introduce lecture number 17, Introduction to Trends. Most of the people ask from me what is a trend analysis. Let's discuss in detail. Trend analysis is a technique used in technical analysis to attempt Trend analysis is a technique used in technical analysis that attempts to predict the future stock price movement based on recently observed trend data. In simple language, if we track the historical data and if the historical data price movement is upward, we think that the future price movement is also move on upwards. So trend analysis is a basic tool or a basic type of analysis used by trend following strategists. How does investor psychology impact with trends? The power of buyers and sellers are defined by trends. That means if price is uptrend, that means buyers are in control. If the price is downtrend, that means sellers are in control. Aggressiveness or anxiousness of buyers and sellers are also looked after through trends. Emotion of fear and the greed also propelling their actions, and the broader expectation based on historical data is also applicable to the future price movement. Basically, there are two categories of trend. First is based on time, or we also call as fractal. Somebody is also called as it is the trend based on Dow theory. The trend is discussed or subcategorized into three parts: short-term trend, mid-term trend, and long-term trend. Long-term trends in technical is more than a year. If we work for 3 months to 9 months, then that is a mid-term trend. And if we are working for less than 3 months, it is considered to be short-term trend. Price-based, the next subcategory is price-based, or we call it as directional based. If we subcategorize the directional or a price-based trend, it is also subcategorized into three. The uptrend, that means the price is moved upside, direction is positive and upside. Downward trend, that means the direction of the price movement is downside. And the sideways trend, that means neither the buyers nor the sellers control the market. It is a consolidation phase, or majority people is called as sideways trend. Now we discuss directional trend in detail. There are three types of directional trend. First is upward, another one is downtrend, and the third one is sideways trend. Somebody is also called as range bound trend. Let's discuss or understand uptrend in simple terms. An uptrend describes the price movement of a financial asset where overall direction is upward. In an upward trend, each successive top and bottom is higher from the previous one. Investors take action in uptrend. They always go for buying on dips. That means a further correction or a correction within a trend is an opportunity for accumulation or successive bottoms. By the help of a sample chart, you can easily understand the working of uptrend. As the sample image show on your screen, you can see there is an uptrend shown by 1, 2, 3, 4, 5 and 6 points. If you see seriously and in depth about that picture, the fourth is the successive top and the fifth is the successive bottom, which is higher than the previous successive top and bottom, that is 2 and 3. The uptrend is broken if the next low of the chart falls below the point number 5. That means the price create a lower bottom. The opposite of uptrend is called as downtrend. We can also understand the uptrend by a simple example. Let's see the chart that is shown on your screen. If we see a simple chart, the overall historical price movement is upward, and this upward movement is identified by a blue line which is on upward direction. It connects the major successive bottoms, and some people is also called as upward trend line. The overall structure of the price is positive, and every correction within a trend is an opportunity for buying. I hope you understand the uptrend by a simple examples. Now we discuss downtrend in detail. A downtrend occurs when the price of an asset moves lower over a period of time. When the price move intermittently higher or lower, downtrends are characterized by lower tops and lower bottoms over a period of time. Investors take action in downtrend, they sell on rise or on successive tops. Simple image show on your screen, we can easily understand the application of downtrend. There is a simple series which is pointed downside, and it is figured out by 1, 2, 3 and 4. If you clearly identify that pattern, the 4 point is the successive lower top and the third is the successive lower bottom, and both third and fourth are lower from the previous one, that is 1 and 2. So it is very simple. If the current top and bottom are lower than the previous top and bottom, we are in a downtrend. Notice how each successive peaks and throw is lower than the previous one. Now by the help of an example chart, you can easily understand the movement as well as the downtrend. As a chart show on your screen, you can see there is a blue dotted line which clearly identifies that the price is in a stand of down, and the each successive top and bottom are lower from the previous one. Now we discuss the third form of directional trend. Sideways trend we also call as sideways trend or a range bound trend. A sideways market or a sideways drift occurs when the price of security trade within a range without forming any distinctive trend. That means if the price is not on a successive higher tops, higher bottom, nor on lower tops and lower bottom, it means the price will be prevailing in sideways trend. The price action oscillate in a horizontal range or channel with neither the bulls nor the bears take the control over the prices. As we understand the simple sideways trend in a simple example, let's see the chart on your screen. There are two horizontal lines. First horizontal line connects the bottoms and the next horizontal line connects the tops, and the price travel between the top and bottom. Please remember that in this kind of conditions, the volume participation is very low. The main reason behind the low volume is neither the buyer control the market, neither the sellers control the market. It is purely an indecision condition for both of them. I hope you understand all three types of trends based on direction. If you want to go for a trend following trading methodology, you must excel your skills to get the trend or catch the trend as soon as possible. The trends are used by the short-term traders as well as the long-term horizon traders, and you can apply on any kind of asset class. I hope you understand all three trends, and we also provide you the various samples, spreadsheets or various charts, images in your curriculum so that you can practice it well.